Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. A little bit of a departure from the normal industry type thing that we do here every week with Charles, but on his radar this week, that's Charles Roplat, our senior market analyst, by the way, who puts this piece together for us. On his radar this week is Q2 earnings, and this is a big topic because we're coming up to a critical point here in the earnings cycle. I mean, everybody maybe has written off Q2 earnings, but Q3 is probably the more critical time for this year, right?
Well, I think right now, as much as people say they're looking ahead, really Q2 earnings are going to be in focus, and people are going to be concerned as to whether or not companies are actually topping expectations. We have actually seen, overall, we've seen a number of cuts drop and the number of positive revisions actually go upwards, and that's for full year estimates. We've also seen for several companies where second quarter earnings estimates have actually gone upwards. So there's a sense during the first quarter that analysts were overly pessimistic, and what we really want to see with second quarter earnings is a continuation of that theme where analysts underestimated the earnings power of these companies. Obviously, following that up, we want to see some good guidance, numbers similar to what Oracle did on Tuesday night, but as much as people say they're looking ahead, the reality is they are going to pay attention to second quarter earnings, and if they don't come in above expectations, I think that will be a concern.
But at one point, we're going to have to start seeing some top-line growth here if we expect the market rally to continue. Is that right?
Oh, absolutely, but I don't think we're going to see it in the second quarter. I don't think people are expecting to see it in the second quarter. Really, what they want to have a sense is that people are topping the lowered expectations and the sense that these companies do have some type of guidance heading to the second half, at least if the guidance says, you know what, I still don't know what business is going to be like, but it sure seems better now than it looked like in April when we last talked to you.
Okay. You outlined some growth industries here. Why don't you share those with us?
Well, the place where I'm seeing the most growth, I should say the strongest growth, and it's a very small number of groups I'm actually seeing growth in, so I should actually put it into that type of box. But the one sector that jumps out is medical. And when you look across it, whether we're looking at insurers, we're looking at pharmacy benefit providers, we're looking at drug companies, across the board, that's where we're seeing the most growth. Unfortunately, as everybody watching this knows, it's also the one sector with the highest amount of political risk. You know, a lot of things are being tossed around. Obama seemed to kind of step back a little bit yesterday from his insistence that any plan have a government-run health insurance system. He says he still wants it, but then he's saying he might kind of flip on a little bit if there's some other things going on there.
But I'm hearing, though, that in that arena, scuttlebutt on the street is that we could see a good deal of M&A activity emerge later this year.
Well, we could, but I think the big focus right now is really with that healthcare. And the reason why I'm focusing on it is I want people to understand we will see some good numbers out of the healthcare sector, but expectations are going to be tempered, and we really don't know what's going to emerge. And it really doesn't affect second quarter earnings, but it does affect future earnings. And so when you're looking at it, everybody wants to know, obviously, okay, where can I find the strongest growth? And the reality is you can find the strongest growth in medical, but you can't look at medical and not understand a political background to it. So there could be upside. We could see a bounce of these stocks, but I want people to understand that going into the sector right now is not without risk, and it's risk that we really can't predict because we don't know what plan is going to emerge or what impact that's going to have on the perception of these companies. But it does seem like some of that political risk is priced into the stocks, and there could be some good values relative to where they're trading, or really relative to how they perform relative to other companies, and certainly relative to their growth.
Refining, another area that could show some growth?
And this is interesting because when you look at the numbers, especially when you look at Sunoco and you look at Sunoco and Valero, just one Sunoco company, not two of them. But when you look at those two, the numbers are showing very strong growth. And if you just look at the projected growth numbers, you're like, wow, this is great. The reality is they're actually facing very easy comps. Oil prices were spiking last year. They actually reached their peak in July. So you're really looking near the tail end of last year. So these very easy comps. The problem is as we near the end of the second quarter, we've seen oil pull back, but it recently hit $70 a barrel. That hurt margins. Our analyst, Shiraz Mian, recently downgraded his long-term rec on these companies.
Right.
And so I think it's a case where you see the really strong growth, you really, again, you have to take a step back and really put an asterisk by it. Yeah, growth is going to be strong, but there's some other reasons to look at it and really maybe shy away from it. So, and that's kind of how the second quarter is going to be. When we're looking at some of the areas with the strongest growth by numbers, there's going to be reasons to be cautious. But then if we look at some of these sectors where we had some really lousy growth, we might actually see some positive reactions. And a good example is semiconductors, simply because they're now starting to rebound. So we'll see terrible year-over-year numbers, but the numbers could be better than expected, and we could get a sense that things are improving. So in some ways, it's going to be a little bit upside down this year in terms of earnings season versus traditionally, we want to look for the sectors that do have the strongest growth and maybe put our money into them.
All right, Charles also outlined some areas that you may want to look to for surprises when it comes to Q2 earnings. And you can get to that information by going to Zacks.com and scrolling down the homepage until you get to the headline of Charles' industry rank analysis this week. Click on it and it'll take you right to that information. With Charles Rotblatt, I'm Terry Ruffalo.